Hello and welcome back to the channel. I have an interesting video today. I saw that you all liked the fair value calculation for Facebook, so I decided to make more video of this kind. And today we will be calculating the fair value of Ford Motor Company. So we see on the last 6 months the stock had a good run from $12 to the highest we saw here January 14. The stock was at its peak at $25.19, and then we saw a pullback, as well as we see here an increasing volume of trading of the stock, which is noticeable. Ford Motor is a well-known company and it's traded all over the world, so let's give it a shot and check its fair value. For this we will head to the financials, and here we see the income statement. So we'll be interested in the total revenue. We see that the revenue here is declining from 2018 until 2021. They started with $160 billion and now their revenue is at the level of $136 billion. The bottom line, the net income. The net income is not stable and is not linear. We see on 2018 they made a $3.67 billion. On 2019 they only made 47 million. On 2020 they were at a loss of 1,279 million, and for the 2021 they made 17,937, almost $18 billion, and the trailing year they are expecting the same numbers. After that we need to take a look at the operating cash flow. The operating cash flow was increasing until 2020, and then the breakout of the virus did affect the business disturbance on the supply chain. So we saw a growth of the free cash flow from 15 billion until 24 billion in 2020, and then a decline by almost 10 billion for 2021 and the trailing year. The capital expenditure, we see that the capital expenditure is reasonable and is about the same value, on average 6 billion. Here we have on 2018 7,785 million, 2019 7,632 billion, 2020 5,742 million, 2021 6,227 million, and the trailing year is the same. So these are the data that we will be using, as well as we will need for our template calculation the outstanding shares, which they have 4 billion shares. We will use also the analysis page to calculate the estimated revenue for 2023 and 2024. So basically we will be using this number. So let's jump right in our template. We put here the ticker symbol F for Ford Company. I already took the operating cash flow from Yahoo Finance and the capital expenditure. I looked in the revenue and the net income. We see here that the net income vary and not linear, so this will affect our calculation for the net income margin and the free cash flow to net income ratio. So basically we here on the 2018 we saw the net income margin was 2.29%, on 2019 0.03%, and the net income is negative on the year 2020, and on the year 2021 is 13.16%, is a big jump from negative level to a two-digit margin level. So we have the average of 5.52%. For the free cash flow we have negative numbers here and big value. This doesn't make sense, so we will go with these two last values for our calculation as they seem more reasonable. So the next step is the forecast. We take the projected revenue in the future from the Yahoo Finance analysis page for the projected revenue for the year 2023, and it was projected at 160,580,000,000. And let's prop up the number here a bit for the year, for the next year. Let's say 165 billion, and then the template will populate the next years until the 2030. Here we have to put our growth rate, so we will go with the global growth rate, which is on the average of 2.5% and 3%. So we will take 2.5 for until 2025, and we will estimate 3% until from 2025 till 2028. Here we will be using our average net margin, which is 5.52. I use the same number until 3033. For the free cash flow to net income ratio, we will be using this value of 53.30%, as it's the most reasonable one. And we populate the same thing, and there we will have our discounted free cash flow equity in the future. We take all this number, so we copy all these numbers, we copy, and then we come here and we paste special as a value. There you go. And here this is our normal case, so we will populate our requirement. We require, like always, 10%, and we will estimate a perpetual growth of 3%, and then we have the total share outstanding, which is equal at 4 billion, and there we have a fair value of $17.45 for the stock. Now the bull case. For the bull case, we do the same thing. We paste special value, our discounted free cash flow in the future. We require here, as always, 10%, and let's suppose that the perpetual growth in the future is 3.5%, and here we put our total share outstanding 4 billion, and for our bull case, our fair value, the most that we can pay for the stock, is $18.29. For the bear case, we take the discounted free cash flow, okay, in the future, so we paste it as a value. Put the share outstanding at 4 billion, and our rate of return is always 10%, and the perpetual growth in the future, let's suppose, is at 2.5%, our perpetual growth in the future. And there we have a fair value for the stock in the bear case of $16.71. So here we will play with the probability. Let's say that the normal case to occur has a probability of 50%. The bull case probability is 30%, and the bear case probability will be 20%. And there we have the average fair value for the stock is $17.55. So at the moment Ford is trading at $18.35. It's trading at a premium if we compare it to the average fair value that we calculated.
If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.